Dear students, today we will start on departmental accounting. So what do you know about departmental accounting? So departments are basically those organizations where it is situated within a single premises. So let us look into more detail. It is an organization which may produce or buy and sell several products or perform different services under the same premises. As I told you, it will all be concerned within the same premises. The accounts of these organizations are finalized at the end of the year. Even in departmental accounting, it is compulsory that we need to finalize the accounts within the same year. The method of accounting followed by these organizations is known as departmental accounting. So when we comprise the accounts of all the departments together, we call them as departmental accounting. So what is the need? Why do we have to do a departmental accounting? To compare the results of the departments of the previous year. So we can compare the results of this department with the previous year's department results. Not only that, you can compare the results of the between the departments. For example, sales department with the purchase department, HR department with any other department. So you compare between the departments the results to assess the position of the stocks, whether you need to buy stocks, whether you need to release stocks, whether there is an overstocking. So all that position you may be identified with the help of departmental accounting to assess the weakness of a particular department. You will be in a position to assess the weakness also, to decide upon expansion, discontinuation and investments. You can identify whether you need to expand any particular department, it is extremely doing well. If any department is not doing well, you can discontinue on those departments, or any department needs any investments or you need to reduce on your investments. So advantages. So what becomes the advantages of departmental accounting? Ascertainment of profit. Yes. As I told you in the previous slide itself, we can ascertain the profits of different departments within the department, between the departments. Comparative performance, yes, between the departments. Appraisal of the personals. So every department have HR involved in it. So within the HR, you can do the performance appraisal. Remedial measures. If something goes wrong, then you can do the remedial measures of those particular departments. Expansion and diversification. Yes, you can go in for expansion and diversification of those departments. Policy formulation. What do you need? Whether you want to go in for expansion, whether you want to go in for diversification, whether you want to go for any other remedial measures, you want to take any policy decisions, etc. You can go in for all these. Now then, what is the difference between departments and branch accounting? There is very minute difference between the two. Let's quickly look into it. Location. When you look into departments, all the departments are located within the single premises. Whereas when you look into branches, they are not located within the single premises, they are geographically scattered. Growth. When you see departments, departments are growing vertically, whereas branches are growing horizontally. It is geographically scattered again. Accounting, the accounting are done within the same premises. It is centralized accounting and within the same premises, whereas branches, it is consolidated accounting of all the branches which are geographically scattered. International operations is not possible in departmental accounting, whereas international operations are possible. You can have foreign branches also when it comes to branch accounting. Next one is, okay, so how do we finalize the departmental accounting? There are 4 steps involved in departmental accounting. The first step is your trading account. The second step is your P&L account. The third step is your general P&L account. And the fourth step is your balance sheet. Now I'll tell you the reason why we need a general P&L account. Everywhere we do only a profit and loss account, a trading account, a P&L account. Then why is there a necessity for a general P&L account? I'll come back to you in the latest slide. Coming to this one, expenses. Now you have a little different expenses when you encounter departmental accounting. Expenses are generally allocated in 2 formats in departmental accounting. One is a direct expenses, the other is a indirect expenses. Until now, children, you have understood what is a direct expenses are only which are in relation to what expenses which come in the trading account. But whereas in case of departmental accounting, direct expenses are those expenses which are directly in connection with that particular department. Indirect expenses are those expenses which are allocated to all the departments throughout. So here comes the reason as to why you need a general P&L account. There can be certain expenses which you will not be able to allocate between the departments. So it becomes very, very important that you have a general P&L account. Let us look into direct expenses. As I told you, these can be your direct expenses like wages, salary, carriage inwards, etc., which can be in direct relation to a particular department, whereas it can be certain expenses, indirect expenses, which are common, and joint expenses, which are collectively held by all the departments. For example, rent of a building. All the departments are coined in a particular building, and you give the rent as a common expenses. In such cases, it becomes very difficult for you to apportion the rent. Then how do you allocate the expenses? There becomes a question mark. There is where you need to come into a P&L account. Okay, so now how do you apportion the indirect and the direct expenses? Next slide will tell you how do you apportion it. Here is the slide. Let's go to the next slide. This slide will tell you how are the expenses allocated. So, if it is a selling expenses like sales, commission, bad debts, carriage outwards, then all those expenses should be allocated on the basis of sales ratio. So, if you have department X, Y, Z, and they have given you sales of the three departments, let us say 20,000, 30,000 and 40,000. And let us say carriage outward is given as 50,000, divided in the ratio of 2:3:4. That's all. Simple as that. That is how you need to allocate the expenses. Rent, rates, repairs of buildings, building insurance, depreciation. Anything which is related to rent, rates, it should be on the basis of floor area or the space occupied by the building or the each department. Depreciation of the fixed assets. It is related to fixed assets. Then it should be based on the value of the assets possessed by each department. Lighting, light points which is possessed by the each department. Power, consumption as per the meter of each department. Carriage inward, the purchase value of each department. Workmen's amenities, welfare expenses, number of workers in each department. Workmen's compensation, insurance, ESI, PF, etc. Wages which is given to the workers of those department. Factory manager's salary, time devoted by each department. Premium for loss of profits insurance, profit of each department. So these chart you will have to be very, very clear in order to understand as to how you need to allocate the expenses. So apart from this, there can be interdepartmental transfers between the departments. Now, one department can transfer goods to the other department. Now, these transfers can be on cost price or at selling price. You will have to be very careful when you are doing the problem, whether the transfers are happening at cost price or invoice price, because you need to create stock reserve if the transfers are happening at invoice prices. So let us do a very simple problem on departmental accounting. This is the problem. From the following particulars, prepare a departmental trading and P&L account. They have given you opening stock, sales, purchases, direct expenses, postage stock. Indirect expenses is 3,900, which is collectively given to both the departments, and two departments details are given. Now how do we allocate it? Yes. So here is the solution. First put the trading account, to opening stock of department X and Y individually given, purchases individually given, direct expenses individually given, sales individually given, closing stock individually given. When you do it individually, you will get the gross profit. Bring down the gross profit, postage is individually given. Only indirect expense is given as a joint expense. So how do you allocate? Since no information is given on indirect expense, only sales detail is given. Take the sales, 42,000 is to 36,000. Therefore, 7 is to 6 will be the ratio. Divide it as 7 is to 6. You will get the ratio division. You will get the net profit. This is how you will do the departmental accounting, the trading account, the P&L account. If you have some expenses which cannot be allocated at all, then move on to the third step, which will be the general P&L account, then will be the balance sheet of that particular department. This is a simplest problem which I have brought it to your concern. Thank you.